Hey folks, my name is Chris at Hauseit. Today we're going to talk about an interesting topic that is probably on your mind as it is on the minds of many home buyers and sellers. And that is, are home sellers more willing to negotiate during a stock market downturn? Well, as you're currently seeing in the markets and the volatility we're seeing today with the crisis in Ukraine and the invasion and such, it really depends on the type of seller. We'll start with the first type of seller, which is a developer. So someone who has a whole lot of inventory behind to sell. They typically have a construction loan or some sort of higher interest rate loan than they would like. So there usually is some more urgency in terms of timing for them. And they certainly don't want a repeat of the great financial crisis when many developers were stuck with a lot of unsold inventory when a recession hits. So these guys have invested a lot of money, equity, other investors' money, so they certainly want to get inventory off. They're usually more motivated, they have more inventory behind. So if you are negotiating on a new development condo, for example, the developer may be more likely to offer you concessions, perhaps on some various closing costs, maybe trimmings or any such thing, or perhaps a sort of reduction in through other means as a seller concession and such. Anyway, developers are more open to negotiate in our experience during a stock market downturn when there's a lot of volatility. Of course, they can get very worried too. They don't want to be going into a recession somehow, with so much inventory on hand. However, if you are negotiating with a reseller, so someone, a regular individual who owns a home, has their home on the market, it's really, in that case, dependent on a case-by-case basis, right? It really depends on the seller's situation. If they feel like that it's structurally a hot market like it is in Miami, for example, and there's volatility in the broader markets, oftentimes they may just opt to take it off market or wait it out and see what happens if they think it's going to recover, if they don't need to sell. Of course, we say case-by-case basis because the seller could be someone who is financially distressed themselves. Oftentimes you can check to see is this because they haven't paid property taxes, which you can find out online. You can see whether the property taxes have been paid, there's a tax lien or such. So it really depends. I mean, in the case of a more desperate seller, then sure, they may get actually nervous and be more willing to meet you in the middle and get a deal done. So it really depends. With that said, we've seen that in situations where broader markets have experienced much greater volatility in terms of crisis, what typically happens is the market kind of gets frozen. People are fixated on news, on what's happening in the world. Buyers may have seen, some of their down payment funds go down in value if they haven't sold out from, their investments into cash to be ready for the down payment. Perhaps as a result, their purchasing power has just gone down by whatever the market has dropped. So these are all sort of hiccups to be aware of, and oftentimes, it does lead to reduced activity, as we see oftentimes in times of these crises. I mean, people are just less active and looking around, and they may be looking at the news instead. So again, it really depends. If you are looking to sell or buy in this time period, don't panic. The real estate markets are quite detached. And that is the beauty of real estate as an asset class as well. It's non-mark to market. You're not having a daily sort of price on your property. It's really long-term, non-mark to market. People hold real estate for decades sometimes. So it's really up to you. If you're still looking to buy, I wouldn't let things that happen in the broader markets throw you off. Of course, if you had been holding your down payment in equities, for example, and they've gone down by quite a bit, well, it's up to you to maybe reevaluate. If you've already gone to cash, then perhaps it's an opportunity for you to, really try to negotiate a better deal. And boy, you're in a great spot because, now you have options of deploying into hopefully a better negotiated deal in real estate or into equities at lower prices. So, that's a great position to be in if you are that, and congratulations. But anyway, we hope you found this video helpful. If you did, please hit like or subscribe. Leave us a comment below if you have any further questions. If you're looking to sell, we can help you Save 6% with our agent-assisted FSBO listing, and if you want something more full service, we have a 1% for full service listing option where an agent on our side will handle everything for you. And if you're looking to buy, we can give you 2/3 of the buyer agent commission back, subject to us keeping a minimum of 1% or $7,500 as of this writing, whichever is greater. And that can be quite a bit of money, because in Miami, for example, some new developments offer substantially more than 3% to buyer's agents, such as the Masoni buyer. They'll offer 7% to buyer's agents. Other new construction projects we've seen offer 5%, 6%. So 2/3 of that can be substantial and can cover more than your closing costs. My name is Chris at Hauseit, and we'll see you on the next one.